Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the sell side continue to be a bit more dominant, and at this point, ES is balancing near yesterday's low. So heading into the open, we are going to be using the 73.5 to 75.5 area as the micro bull bear zone to establish short-term directional bias. If ES can hold above 73.5 to 75.5, then there's still potential for buyers to step in and push ES back up towards the 80 to 82 pre-market resistance. And then from there, the next inflection point is 85 quarter, the overnight high, and finally the 87 quarter to 89 quarter initial resistance zone. So if the market holds 73.5 to 75.5, this can be the start of a reversal back up towards pre-market resistance and initial resistance, and then the sell side can still technically be active along the way. In the event of a breakdown below 73.5 to 75.5, that would mark a break below the recent 2-day range. And at that point, as long as we are seeing continued downside momentum and broad market weakness, ES can go directional down to 64.5 to 66.5 pre-market support. That's an area that may get some responsive buying, some rotation, but at that point, the sell side would be in firm control, so it would be risky trading 64.5 to 66.5 on the long side. Because ES could be just slicing through and going down to the 56 to 58, which is really the next bigger inflection point. So how the market reacts at 73.5 to 75.5 is really going to set the tone and the bias for the day. If we hold 73.5 to 75.5, then we can continue to balance above the micro bull bear and make our way all the way back up towards 87 quarter to 89 quarter. And if there's a lot of upside momentum and broad market strength, then potentially even 92.75 to 94.75, at which point responsive sellers can be a bit more aggressive and the zone has potential to cap the upside. But if we break and the break is on high momentum with broad market weakness, then we can go directional on the downside and at the very minimum test 64.5 to 66.5 with potential to go down to 56 to 58, and then from there we'll just have to see the level of selling we're seeing in the market and just how much momentum we're seeing as the market goes down. So that's really the main idea heading into the open. Bigger picture, the market continues to balance in a fairly wide range, but sell side has been more active. We've seen a nice buy response too, but that happened all the way down at 46.5, so the market had to plunge pretty low in order to attract responsive buyers there. Up within the range where we're trading now, the sell side has been more active and more dominant. So, we just have to be careful on the long side at 73.5 to 75.5 and just see whether we are getting downside momentum or neutral momentum or upside momentum off the open. So keep an eye on the NYC tick. That's going to be a good gauge to determine which side is really pressing here. Because in order to get any decent downside push below 73.50, we are going to have to see broad market weakness, the other markets selling off as well, and some sustained downside momentum. Without that, it can be a bit more of a choppy and rotational move. So it's very important to understand the type of environment that you're trading in, whether it's directional or more balanced and more choppy, and have a better feel for the character of price action on the day. With today being Friday, heading into the weekend, there can be some squaring of positions, which can add to the rotational nature of the S&P, unless there's just some clear downside or upside momentum. So just keep a close eye on 73.5 to 75.5. That's going to help us set the bias for the day, and we'll take it from there.